Hello, welcome to the Market Ladder. I'm Joel, I'm the Chief Market Technician here, and today we're going to talk about the overall market condition and talk a little bit about last week's trades. As always, there's a risk disclaimer I must discuss. I am not a financial advisor, and investing in the stock market is inherently dangerous, so please take any trades at your own risk. Thank you. All right, now let's dig in. We're going to look at the SPY ETF, which represents the S&P 500. A very large market index of the overall stock market and a good indicator of whether the stock market is doing very well or very poorly. So every candlestick on this chart is a weekly indication of the price action. And on this chart, we're going back to May 2021. And then you can see it 2022 is when we really started to come down quite a bit. We bottomed out about October 2022 and start to rally back. So we've looked at this chart quite a bit if you've been following along on the market ladder. But this is a bullish pattern. This is a rounding base, you can see right here. And then once we broke above this red resistance zone late April, early May, it's been gangbusters ever since. Now, one of the things you can do on a rounding base is you can draw from the highs to the lows and see how much percentage you got. We got 16.5% there, and then you can project that upward from there and say our profit target is roughly 16.5% from this area all the way to the top, and we've only gone about 8%, so we're about halfway there. So I do expect that we have actually more legs, more height, and more uptrend to go, believe it or not. So that's what I'm expecting. But we do, I do think there will be a significant dip along the way, and we're going to talk about that on the next slide. But everything here looks very bullish, except for this potential resistance zone right here. And I drew that in because this is resistance here clearly, and it comes all the way and it meets this price action right where we ended up very nicely this week, and we had a couple weeks ago we had a tail to the top side. So that is potential resistance. I just wanted to say I usually don't worry or to put too much weight into it when they're more than a year old, and we're looking at, you know, definitely more than a year out. So we usually don't have that resistance that takes effect. It can still happen. So the other things we talked about is why this overall chart is bullish. We had the volume coming in at the right areas at all these lows, and then we had a decent, not a great volume on the breakout. So all that was bullish on the volume. And then our RSI indicator, anytime we're above this yellow mid zone, that means that bulls are in control. And we got above that early of this year, 2023, and we pretty much stayed above that the entire year. We just had that one little point there that got below it, and then ever since then it just popped up and stayed above. So that means that bulls are in control, and we are bullish on the market. Okay, so now let's look at the daily chart of the SPY, which again just tracks the S&P 500. And so 2023 we popped up early, and then we found this resistance zone. We came down almost 10%, and then we popped back up until we met this resistance zone. And then when we did finally break out either here or here, say late May, early June, then that resistance zone became support, and we really went gangbusters since then. And then a couple weeks ago we did have that minor pullback, and then we shot back up. So again, we have a potential resistance here, but because so much on the charts look bullish, I don't think we're going to have a big pull down just yet. And we're going to talk about that a little bit more on the next slides, but we are definitely bullish. So here's my bigger concern, a little bit more so. This is the NASDAQ, and this is another index. This is just focuses more on technology stocks than the S&P 500 does. And we shot up again from the beginning of the year to here. We had 25% since the end of December, and then another 14%. And so that's a big matzo ball, if you will, right? That's quite a bit. And then the other thing is that it's going very much almost vertically up. So I like to see it stair step up more and have more pauses in between. So anytime it goes up in that vertical fashion, I like to say that you're going to have a more severe downturn than we've had yet, especially since May of this year. And you could even say since March. We just kind of went sideways and then went straight up from there. So I'm expecting that we're going to have a more significant downturn, and we do so. I'm still bullish, and that may be an indication to buy into one of the market ETFs. So we'll be keeping a close eye on that. We'll of course have all our stops in place, and that was my bigger concern, is that how vertical we've been, and that blue arrow shows how vertical we have been since March. And then one other thing I found interesting on this chart, I just wanted to point that out and show you guys, is that if you see this red band here, and it goes, it goes here, and it swings down, and then starts to go back up. What that is that's the SMA 40 with a plus or minus 2% window. And what it does is it shows pretty good support and resistance to this weekly chart. And the SMA 40 on the weekly is pretty close to the SMA 200 on the daily. You've probably heard the SMA 200 before on the daily chart. It comes up sometimes on talk shows and stuff, and they say, oh, we're below the SMA 200. And that's because it just does naturally show a pretty good indication of whether the overall market is bullish or bearish. And so people tend to freak out a little bit when we first start to go below it, and for good reason, because when we go below it, it can mean that we're going to go a lot more below it before things get better. And so again, looking at this indication, once we got below it here in 2022, this what was support now became resistance. So we shot below it, came back up, found resistance here, found resistance here, found resistance here. And then notice, isn't this interesting how when it did shoot above it and it came back to it, now we've got support here, and it's been just going up nuts ever since. So that's just something interesting. I wanted to point that out. Again, that's this is a moving average envelope of SMA 40 with a plus or minus 2% window. And so anytime, again, with any moving average or any support resistance zone, it's never a distinct line. It's always a range. And so that's the other point I wanted to make about this indicator. So that's why you see it as a not a single line, but more of an envelope. Okay, thought you might like that. So now let's look at the NASDAQ daily, and we've shot up again 20% early January, and that just shot up very quickly, found this resistance zone, and then once it popped above the resistance becomes support. And it didn't really go anywhere, though, surprisingly, for about 6 weeks. But once it did, it really shot up, and then we shot up another 20%. So we're up 40% on the NASDAQ, and yes, that's a lot. So that's that's a little bit concerning. It's definitely getting hot, but what I did show is that calm conditions persist. So even though we're hot here, I'm not seeing the volume going crazy, and I'm not seeing volatility go really high. So when we see volatility go up, which is another indicator I would show you if it was going high, but it's not yet, and if volume was going above average, then that's a sign that the uptrend is about to roll over or have a significant downturn at least. And so calm conditions persist. I think it's going to go up higher from here, believe it or not, before we get that first significant pullback and when I say significant pullback, I'm talking 4 to 5%, or rather than this 2% pullback we had a couple weeks ago. And so our volume is looking pretty ordinary. We're not getting the volatility. We do have a little bit of a bear divergence showing up here, and what that means is that if we get higher highs on the price action, but we get lower highs on the RSI, that would be a potential warning sign that we are going to have a pullback from there. So we'll keep a close eye on that. All right, so let's look at last week's trades. And we had TMF, which was a half size, and it closed out for negative 3.7%, and a half size, which we ended up closing out unusual, but we closed out right at 0%. And then we had two trades. These were also half size, by the way, ERY and DRN, that closed out at 5.1% and 9.5% respectively. So that was a decent week. And the week before, I talked about we had a bad week, and that was, if I remember correctly, and don't quote me on this, but I think that was the first losing week we had since I've opened up the business. So that was a bad week. And again, my goal is that we have now at least 8 weeks of positive weeks. We still have some trades that will be in the red, but we want overall for the week we end up positive. So let's see how it goes. This was a decent week. We ended up in the green, and I want to see if we can do this again for at least 7 more weeks. And we also have that performance review coming up. That'll be interesting. I'm going to load in all the trades. I think it's for the last 6 to 8 weeks that haven't showed up on the performance chart. I have to do that manually, so I'm going to load that up, and then we'll discuss that on the next ladder post. How's that sound? So be on the lookout for that. That'll be interesting. All right, so current positions. You guys on the market ladder, you know what these are exactly, but we got into Boyle, and we've been trying to get in that for a while. It just didn't give me a good buy point that I was happy with. So we just took a small bite size of that, and we're going to ride that out for a while and see how that goes. But I think that'll be interesting. We're going to kind of let that gyrate up and down, and hopefully we can get a profit out of that. And then I would want to talk a little bit about how we've moved some profit targets and stops, right? How I've set that in there. So initially, when I set this up, my thought process was that I would just set them in there and we'd forget them, right? I'd set in the buy order, the profit targets, and the stops, and we would just totally forget about them and just let them ride out. But what I'm seeing is that there's opportunities come up to tweak those, and as I see those, I think it's more important that we just go back in and we tweak those. And I know that's a little bit of a pain for you guys to have to go in and move those around, but I think it's more important that the bottom line looks good, and it doesn't take too long. It takes 5 to 10 minutes, I would say, tops, to go in and move some profit targets around. And if I can see areas that we're going to tweak those, I will go into those. I'll try not to do it too much where you're having to go in every day and move stuff around. But probably if I can get 1 to 2%, or I think I can get 1 or 2% more out of every trade, then I think that's at the point that I should go in and have some tweaks. So if you've been following me for, a couple of months or more, then you'll know that you're starting to see more of these move stops around. And I just wanted to talk to that a little bit. Okay, so we've got a couple of trades that we're still in, that we're looking to fill the last half positions. And like I said, we've got 7 positions now on the books, so I don't want to put any more trades on, but as the current trades come off, I will certainly look for new trades to add if I see good, compelling trades. And again, this week I'll work on an overall performance of the market ladder and see what we can glean out of that. I think it'll be very interesting. Keep an eye out for that. All right, so in summary, the market is certainly bullish, and yes, it's a little bit hot, but right now, at this moment, I'm not seeing signs of it turning down just yet. So when we do, we'll talk about that on the ladder update videos. And that's it. That's the wrap up. So as always, thanks for watching, and I hope to see you next time at the market ladder. Thanks again. Bye for now.